This is the AI News Flash for July 30th, midnight UTC. First up, Microsoft reported fourth quarter fiscal 2026 results, and annual Azure revenue topped $100 billion for the first time. Quarterly revenue came in at about $90 billion, up 18% year over year. Net income was $35.77 billion, or $4.81 per share. Beating analyst estimates a year earlier, net income was $27.23 billion, or $3.65 per share. Azure and other cloud services grew 43% for the quarter, while Microsoft Cloud overall reached $59.3 billion, up 27%. For the full fiscal year, Azure alone crossed $100 billion with growth of 41%. The company also disclosed adoption figures for its AI products. Microsoft 365 Copilot passed 30 million paid seats, and Microsoft said internal usage has reached levels comparable to Teams and Outlook. The key question heading into the print was whether massive AI capital spending is translating into revenue, because the cloud outlook beat expectations. Shares rose in extended trading, standing in sharp contrast to another company reporting the same evening. Next, Meta Platforms reported second quarter results showing free cash flow down 91% year over year, and the stock fell 10% in extended trading. Free cash flow for the quarter ended June 30th was $784 million, down from $8.55 billion a year earlier, driven by accelerating AI infrastructure investment. Earnings came in at $6.18 per share against expectations of $7.22, while revenue of $60.8 billion beat the $60.17 billion expected. Meta narrowed its 2026 capital expenditure forecast to a range of $130 to $145 billion, raising the low end while keeping the top of the range unchanged. Its revenue outlook came in below market expectations. The RealityLabs division posted a quarterly loss of roughly $4.6 billion, bringing cumulative losses since 2021 to around $88 billion. The company also announced a $14 billion data center partnership with BlackRock in El Paso, Texas. On the call, CEO Mark Zuckerberg predicted that within 5 years, billions of people will have personal AI agents handling finances, health, relationships, and household management. Meta's business agents on WhatsApp and Messenger have been adopted by more than 1 million businesses, though consumer adoption remains the challenge. Third, according to a Reuters exclusive, Intel has been providing design code for its low-power Atom processor to a startup called RosaicLabs. What is being shared is register transfer-level code the blueprint engineers use to describe chip behavior and build custom designs. Intel has historically kept tight restrictions on licensing its x86 architecture, making this an unusual arrangement. RosaicLabs filed its first incorporation documents in Delaware in May, and an amended filing indicates it can seek a seed round of $10 million. Its chief executive is Amarjeet Gill, a venture capital investor and longtime chip industry executive. The focus here is conflict of interest. Gill is a longtime co-investor with Intel chief executive Lip-Bu Tan. The two backed Nuvia together, which was sold to Qualcomm, and founded the chip company Rivos together. Meta acquired Rivos last year, outbidding Intel. RosaicLabs' founding team includes Rivos veterans, such as former finance chief Amit Parikh. Intel declined to comment, and Gill and Parikh did not respond to requests for comment. Fourth, the White House released a new policy on high-risk life sciences research that calls for government-wide monitoring where biology and artificial intelligence intersect. The document is titled The U.S. Government Policy for Stopping High-Risk Life Sciences Research. Rather than banning AI use in hazardous research outright, it establishes monitoring as the control mechanism. The Office of Science and Technology Policy will convene an interagency group to track advances at the intersection of the biological sciences and AI, with particular attention to computational life sciences. The National Institutes of Health and the Department of Health and Human Services are also involved. Purely computational work, developing models or software remains permitted unless entities of concern are involved. However, if in silico research results in creating or modifying biological agents that meet the definition of dangerous gain of function, restrictions apply. Finally, Freehand, a San Francisco startup automating enterprise procurement and payments, raised $75 million in a Series B round. The round was co-led by Battery Ventures and New Road Capital Partners, with participation from PSP Growth. The fund led by former U.S. Commerce Secretary Penny Pritzker and Nexus Venture Partners. Total funding now stands at $100 million. The valuation was not disclosed, but co-founder and chief executive Nitin Jayakrishnan said it was a significant step up from the $25 million Series A raised in March 2024. The company itself was founded in 2024. Its AI agents analyze large volumes of data, including contracts and communications, to decide whether to pay, dispute, or negotiate an invoice. That work has traditionally been manual and error-prone. The agents already run supply chain workflows for Meta, Unilever, Johnson & Johnson, Pfizer, Dunkin', and Cardinal Health. Clients report workflows moving 7 times faster and spending reduced by up to 10% through fraud detection and negotiation. That's all for this AI News Flash.